How we doing? How we doing, guys? How's it, Ramsey, Stanley, Cypher, TJ, Luke? How are you all doing? Good morning. Good morning. Hope we all had a good weekend. Sorry, just sorting a few things out here. Yeah, hope we had all had a good weekend, guys. Just waiting for everyone to be here. Alessandro, how you doing? Sorry, quite unprepared this morning, guys. Okay, gonna get into it. GJ and gold. Let me do GJ first. By the way, guys, it is a Japanese bank holiday, so there could be a little less volume in the market, but obviously the UK banks are still open, so it could just be your normal open. But let me just clear all this shit. And on gold, I did look at the charts a little bit, so I'll show you guys what I'm kind of looking at. So what I noticed on GJ was that we closed on the, sorry, let me also get the music back up and running. What I saw on GJ is that last week we closed on the weekly resistance. So what that means is that, you know, weekly resistance and weekly support levels are super, super strong. You can see when we closed on the weekly support, we respected it. And I don't know if you guys remember, probably close to when I started streaming on YouTube, I think it was this week that we had this support form over here. And then I said, okay, there's a good chance that we're going to retest these levels and possibly further. And that's exactly what ended up happening. It just shows how strong the support level and resistance levels are on the weekly time frame, because they're very, very high time frame. And basically this is a lot of data that's within these levels. So there's a good reason why it's rejecting those levels. So what I could expect is that, or what I am expecting is that maybe we get this slight wick up, respect the previous weekly high, and then start moving down, and then possibly scale into some moves on the way down. That's all just based on what I'm looking at on the weekly time frame. Obviously, if we start breaking the previous weekly candle high, there is chance of bullish continuation, especially if we have all the structure on our side. So if we look at the structure as well, on the weekly, we are bullish. Obviously, we just take into consideration the previous weekly candle until Wednesday, and then you take into consideration the current weekly candle. If we look on the daily, we're obviously still bullish. This was our move which happened ages ago, and we never ever got below that point, and this is still our high. You can see this hasn't exceeded this point, so that's still classified as our high over here. So we're still bullish. You can see we did form a support on Friday, but now we're coming up to this daily resistance level. So we are still bullish again, but we're at that very strong weekly level, so it's going to be quite interesting to see what happens there. If we drop down to the 4-hour time frame, almost looks like we are going to retest this 4-hour high, and then maybe we could start rejecting at this 4-hour level. We are also at the moment bearish on the 4-hour. If this was our high, remember we look for the two or more candle pullback, so that would be this. That created the high, and then now this point exceeded that point, making us bearish in market structure until we get above this high. So the 4-hour is bearish, the weekly is bullish, the daily is bullish. You can also see that on the 4-hour, we have these sort of 4-hour support levels. We've just early on broke above this 4-hour resistance level, which makes possibly testing this 4-hour resistance level quite possible. Good morning, Wayne. How are you doing? Good morning, Sharif. How are you doing? But what I would like to see is honestly us start coming down, and then on the lower time frames, looking for some entries just based on that that weekly resistance. FTMO passed to start the new year. Well, really, really well done, Wayne. Congratulations. I know for a lot of people that is a very, very, tough challenge. So yeah, congrats. That's very, very good. So again, not too many support and resistance zones to mark out just yet. You can see the 4-hour, we would only really be able to mark out this support, which is quite far away from current price. So what I would then do is obviously drop down to the lower time frames, So maybe the 1 hour or the 30 minute, preferably the 30 minute. And I would find zones which I'm looking to then trade. So we can see here we have resistance level coming up over here. And if we break above there, we're going to have the clean candles to the left. That obviously is going to be a little bit risky due to the higher time frame sort of area that we're in, that resistance level. But like I said, there is obviously still possibility of that bullish continuation. So what I'll be looking for is obviously buys above that level and then possible sells below this level. Because if you look left over here, we can see some clean candles. I do need to obviously just work out what the range for this is. I haven't checked that. It's about 12 pips, so it's not the most range. You know, we do preferably like to see 15 or more, but it is clean candles. And we're coming into a time of high volume, so we could just get that strong push below that level. But otherwise, yeah, structure-wise, we are still bearish on the 30 minute. And the reason for that is if this was our high up here, this area formed the high, we then got a close below that level. We haven't had a close above then the area which created that low. So that would be this level over here. You can see we have not got a candle close above that level, meaning we're still bearish. So at the moment, remember, we have a 2v2 bearish bullish market structure. So it's very equal. There are both buyers and sellers in a good presence in the market. So again, chatting about it, I think it was, I didn't stream on Friday, but chatting about it on Thursday, what you would then do is look at the daily time frame for possible indication of, okay, if it's equal in market structure, look at the daily time frame, and during today, who looks like they're more in charge? Well, if you look at the moment, obviously the buyers look like they're more in charge of the market than the sellers. So that could be an indication as well. There's also a lot more buying range over here. Like I said, we just got to be careful of that higher time frame sort of possibilities of that rejection at the weekly, because we closed on a weekly resistance level. So I'm looking for, I'll just type it in here. Let me just mark out where I would be looking to get up to if we break above here. Not interested at all in taking a trade in this current range, guys, at all. So I will be looking for potential buys above this level.
Your work can feel much smoother with Monday.com.
Sorry, YouTube ads. Potential buys above 157.471. Alessandro, I'll take a look at your charts now. I did see that you sent them in the Telegram. I'll take a look now. And I'll be looking for potential sells below 157.233. Obviously, there's not a lot of range to sell into, guys. You can see that there's only, when I measured it just now, it was 12 pips of range, so it's not a lot at all. Meaning that obviously buys would be a lot more preferable if we're going with the daily structure as well, or the daily sort of candle. Taking that into consideration, buys are obviously looking a lot more probable than the sells. But let's see what London Open kind of shows us. We could also, I suppose, looking at this now, be looking for some possible buys above this level up to, it's only 9 pips, so I definitely won't be interested in that, but I can see why it could possibly work out. NM, how you doing? It has been a while. Happy New Year. Hope you had a good New Year. Let me check out the charts in the Telegram. So this is a chart from Alessandro on GJ. I'm assuming. Just came back from holiday. Welcome. Okay, so you also have the 2v2 market structure. Really nice. Potential sells below this level. Nice, that's what I'm looking at as well. Let me see. 157.130. So you're looking at below here, basically. Yeah, these are the much safer sells, to be honest, Alessandro, below this level. These are just going to be basically impulse sells down to this level. There's not enough range to really wait for that candle close and then continuation. It would be more of an impulse entry, because obviously when you have a much smaller range, if you wait for that candle close, it obviously is going to eat into a lot of your trading range. The potential buys above this 157.420 level, I really like. Similar to what I have, obviously I've just marked the top of the wick, but I'd be looking for anything basically above that level over there. So 438, I could actually change that. Expecting volume to just continue and push us through. But I do like how you have identified the correct market structure here, so you can see that obviously we are in that 2v2, so buys or sells can both kind of play out, and it's going to be almost just playing it by how the candles form at this point. It's a really nice chart. Counter trend trade, yeah. Okay, so also Forex Factory, guys, there's not a lot of news coming out today. You can see it's very low impact, all of it. Tomorrow we have some dollar news coming out, some high impact dollar news. It's not it's someone talking, so it's not really going to be like a huge amount of statistics, which normally is the new fundamentals that move markets the most. You know, when you have a whole bunch of numbers, previous numbers compared to current numbers. So that's going to be pretty mediocre news. And then obviously on Wednesday there's a lot more news. There's CPI, which is historically has moved price quite a lot, and then there's also these bond auctions. But today next to nothing, so it's also a yen bank holiday, or Japanese should I say, bank holiday. Okay, if we go to gold as well, so let's do a quick breakdown on gold. Gold, looking at it from earlier, is very choppy in price action. I didn't really like the look of it. You can see yesterday was last week was a very strong bearish week. We formed obviously this resistance, weekly resistance level. We also, one thing that does make me think that we could continue bullish is we came down to this weekly support level, we wicked into it and rejected it. We closed back up here, so we came to the support level and rejected it. So on the lower time frames, that's going to basically be support for me at that level. So that's often an indicator that, okay, we've gone to that support level, now we can start pushing bullish again because we rejected that support level. So that would obviously have to line up with our lower time frames as well. So that's what it looks like on the high time frame. You can see on the weekly we are bearish in market structure. On the daily we're still bullish. This was our high point which created the high, haven't got to close below that level. So we're still bullish on the daily. If we go to the 4 hour, we also formed a daily support on Friday. So this over here. So if we go and break Friday's daily high, there's a good chance that we can fill quite a lot of this range. That's what I'll be looking for. Then on the 4 hour, at the moment we are bearish. This was our high point which created the high. You can see we did get a candle close below that level, 4 hour candle close. So we're only going to be basically bullish above this level up here. So 4 hours bearish. So at the moment we have weekly bearish, daily bullish, 4 hour bearish. You can see we are also forming some nice resistance levels on the 4 hour that if we break above. Our only problem is this large wick, which you'll see when we drop down to the lower time frames. It's quite inconvenient, but it's, you know, it's manageable. And then we have the support level, which is currently forming on the 4 hour. It hasn't formed yet. And if we break below that, we can possibly fill this sort of area on the lower time frame. So if we drop down to the 1 hour, market structure wise on the 1 hour, we are still bearish in market structure. So I have a 3v1 bearish bias, but I do think that based on, again, the higher time frames, looking at how those candles were forming, that we could continue bullish. Obviously, I'll be able to assess the situation if we don't. But what I'll be looking at is probably sells below the 1791 area. You can see we have clean candles on the 1 hour. It's also clean candles on the 30 minutes. And then buys, I'll probably be looking for buys above 1798 to probably about 1801. Gold is forming an apex. I have no idea what an apex is. It sounds like some shape terminology. If you can educate us on what Apex is, NM. Check DMs. Sorry guys, just sorting something out. No, it's what I use for crypto, okay. So on gold, we're looking for potential buys. Above 1798.72. Remember, based on pure market structure, guys, that is counter trend. So you do need to obviously be a bit careful of that. And then looking for potential sells. Below 1791.39. And the reason we're looking at these areas is obviously because of the clean candles to the left. Wouldn't be trading that if we didn't have enough trading range to trade into, so that's the importance of waiting for price to get into those areas. If we look at the 30 minutes, there was kind of a trade opportunity within here, but very counter trend. And again, you don't really want to be trading ranges, so I'd stay away from that. We also have about 12 minutes left until London Open, so let's see what happens. More interested in GJ than gold at the moment, to be honest. So just gotta wait for those candle closes. If you guys have any charts or anything, please send them in as usual. Or if you have any pairs that you want me to analyze, I'll happily help out with that as well. Otherwise, did anyone trade NFP? Because I actually didn't get an opportunity to trade NFP this month. But I hear that it was, you know, looking back at this candle, it looks like it would have, I think it was here, 330, would have been pretty good for buys and sells if you didn't get slipped. Try and send in Telegram, no problem. I know I definitely have some NFP traders in here for sure. GJ coming up nicely. I mean, if we get a candle close above this level and we have London Open to push us bullish, I will happily take those buys. But I am obviously going to be wary that we have a resistance level right here, which we have to worry about. These two basically, which we could definitely reject at as coming into this area. And as you can see here, it's 157.381 to 157.438. It's about 9 or so pips. Not a lot at all, even less, 5 to that level. So we just got to be wary of that. Also could just end up getting that possibility of us ranging throughout the whole day because we have that Japanese bank holiday, and then tomorrow the volume will kind of pick up and improve. But you know, just gotta play it as we see it. Just adjusting the zones a little bit, guys. So you can see now it's not at the bottom of the wick, but it's basically saying that if we get a candle close below this level, it will be the lowest closing candle in this sort of range. And then if we wick up and break that candle's low, there's a very good chance that we will have that bearish continuation. Same bullish. If we get a candle close, or just with the body closing above all of these candle levels, there's a good chance that if we wick down and then break the high of that candle, we can continue bullish as well. And then let me just put in aggressive. If I could spell. So that's if we get that nice candle close basically above any of these candles and then wick down and then continue bullish. Those would be really nice buys, but we have about seven or so minutes left till London open. Then we can see what we end up getting. Just going to put the current market structure there as well. So obviously what would be ideal if we want to see basically a directional bias established is if we get one of our time frames which is currently either bullish or bearish to flip, because then what that's going to give us is the 3v1. So at the moment, because we have a 2v2, both buys or sells could happen. But if we get that structural flip, let's say at this level up here, on the 30 minutes, what will then happen is once we get that close above that level, then we will have that 3v1 bullish market structure. And then what that indicates to us is by having that overall buyer's market structure, more buyer's pressure in the markets, that then the buyers will make a lot more sense. So if you are a very safe trader and you want to wait for a directional bias to be established, wait for that one time frame structure to flip to a 3v1, and that's going to give you your one-sided structural bias. So then you'll see, okay, there's more buyers in the market. Obviously that means that I'm going to be looking for buying opportunities only. Because at the moment, by trading a 2v2 market structure, it means that buys or sells could take place, but they aren't as certain as if we had a 3v1 or a 4v0. So at the moment we have a 3v1 on gold, but it's going to be very interesting to see, because after seeing this weekly rejection from this previous level of weekly support, there could be a chance that we start this bullish move. But again, I'll probably want to see some structural flip first and then that continuation. More interested at looking at gold on the 1 hour than any other time frame at the moment. Okay, I see we have the apex, which has been sent on Telegram. Don't know if I can get this. Okay, yeah, I see that that is almost like what people would call a wedge, I suppose. Picture. I mean, after rejecting that weekly level, I see why buys would make sense. Interesting. No stress. So basically just waiting for the candle close at this point, guys. We could have really bad volume on GJ, but if that's the situation, we'll obviously assess gold as well. Otherwise, I'm not really interested at looking at any other pairs. But if you guys want me to analyze any other pairs for you guys, I will definitely do that. just send them through either charts or the pair that you want analyzed. I'll put here as well, for anyone interested with that, we have a 3v1 market structure. Bearish. But I'm very keen on taking buys, to be honest. Did you manage to have a look? Let me take a look now. I did have a brief look at it. So this is the 1 hour on GJ. I don't know how to get this across the other screen, so sorry about that, guys. But yeah, I like your buying zone, Sharif. Very nice. 65 pip range. Obviously, you might run into some problems at that 157,500 level. Let me just see where we are now. Yeah, so a little bit higher. Might run into some buying issues. And then sells. I have one of the same selling zones as you. Yeah, I do like that. And then on the 4 hour, yeah, sells below. Basically, guys, if you're looking at higher time frame sells on GJ, wait for some resistance to form here, and then if we form a strong resistance and respect the high of the previous 4 hour candle, we can definitely come down to this level. We have the clean candles to that. Then again, if we break these levels, especially this level over here, there's a very good chance that we're going to continue bearish. That's also plays into us being on this weekly resistance level. You can see last week closed directly on a weekly level of resistance. So that's why I'm feeling at the moment we just want to see a directional bias established, so a buy or a sell bias, so more buyers or more sellers in the market, and then we can capitalize on that. Until that happens, I am kind of going to be a little bit wary about what sorts of trades to be taking on this pair. Guys, if you haven't already, please do remember to leave a like on the stream. Also subscribe. It'd be nice to speak English. Subscribe if you have not already subscribed. I do appreciate it. Yeah, nice chart, Sharif. Very nice. Got about 45 seconds. Gold, at the moment, gold is just not worth looking at. You can see we're stuck in this range. Even if we break below the 70.91 area, I kind of do want to see a candle close below that level. GJ is obviously not moving too well either, probably partially due to the bank holiday. Other than that, we may see a close in this range and then us ranging a little bit more, doing something like this, maybe a little bit of fake out, and then eventually we'll have our directional bias established. If we get a close above this level over here, this level, then we have our structural flip bullish on the 30 minutes, and then that's going to give us our 3v1. So terrible candle close, to be honest with you, in the middle of a range. I mean, taking a trade at this point would just be guessing, so I would maybe advise staying away from this until we get a clear break on one of those areas. But yeah, definitely not interested at all in taking an impulse trade, or an impulse entry, should I say. Not much happening. Yeah, I'd honestly advise staying away from GG at the moment, guys. Especially with a pre-London candle closing like this. So you can see we are in this range, and this pre-London candle literally closed in the range, middle of the range. So that means there's a possibility that we're going to come down to these support levels and back up to these resistance levels and continue doing so. So we get a clear break of, you know, these areas. Maybe even if you're looking for impulse, it's going to definitely want to be below the low of that wick. Then I would just suggest holding tight. There's no points in getting involved yet. Just try wait it out a little bit. We might get a better or a more confirmed candle close once we see the close of this candle. So that's going to be in another 27 minutes or so. Gold's basically the same. Can take a look at GU. I know a lot of people do like trading GU. I'm not personally going to trade it, but I know a lot of people do enjoy trading it. Geez, like, I don't know if that's a mistake on the chart or if that's just from, okay, that must be a mistake on the chart. Yeah, G is also pretty dead at the moment. We can do a full breakdown. I don't know how many of you guys trade GU, but looking on the weekly, still bullish, very bullish. In fact, closed above this level 2 weeks ago. Then you can see we broke the high, continued to this level. So I don't see any reason why we couldn't continue and basically fill this weekly range. We got clean candles to the left. Obviously, you would look for your entries on the lower time frames. So we're bullish market structure on the weekly. On the daily, we have this resistance level, which we're currently at. You can see on Friday, we had a very strong bullish candle close, indicating that we could have that bullish continuation. If we get a retest of this resistance area, which we've more or less closed above, and then a break of this daily high. So that's what you'll be looking for. You also have a lot of clean candles to the left on the daily once you get above this level. If you look there, that's our next resistance level. So you obviously got to be looking at that as well. Our market structure is, because we got the close above here, is bullish as well. So daily bullish, weekly bullish. If you look at the 4 hour, you can see this is quite a strong 4 hour resistance level. We haven't broken above it for a while. So if we do get that close above that level, we also have clean candles to the left for up to about 1.369. Obviously on the lower time frames, you're going to locate some maybe 1 hour and 30-minute resistance within that within those clean candles. We're also bullish in market structure on the 4 hour. This was our high over here, created by this point over here, and we haven't exceeded that. So if we create a new high, then it's going to be this point over here, which if we break below, then we'll be bearish. So at the moment, we have a 3v0 bullish market structure. And then if we drop down to the 1 hour, you can see that, oh sorry, the 30-minute, you can see that obviously price action, you have to look quite far away, but you have all this to trade into, which is obviously very clean candles. So you'll be looking at getting buys above this level still, and that's bought all the way down from the 4 hour time frame. So you haven't even had to move your zone very much. And then if you're looking at where current price is, I wouldn't really be interested in anything until you probably get below this level over here, because then you'll have that 30-minute bearish market structure. This is our high, point which created the high, close below this level, and then here you at least have the clean candles to the left. So I wouldn't be looking for anything but buys on GU. But obviously if you start getting those confirmations such as market structure flips, so bearish below this level, or actually bearish below this level, but then you don't have the range to trade into. So once you flip bearish, you need to then find an area where there's a lot of range to trade into. So that would come obviously below this level, because then our previous level of support below this level is down here. And that's where we can then expect price to possibly move down to. But then remember, you are still in a 3v1 overall market structure, still buyers. So that would still be classed as counter trend. So then what you can maybe look for is coming down to a level of support, and then buying back up to the highs, because then you're buying in a uptrending market at the lows, and then you can scale in. That's how I always look at trying to take trades in with the trend at the best possible prices. Nothing really happening on GJ or GU at the moment. Same, oh sorry, GJ, GU and gold. I'll keep this here as well. You can see how much range it is to trade here, guys. 30 pips. So if you are looking at trading GU, probably wait for a close above this level, and then, or even a high to be created, come back down to this level, buy it at support in an uptrending market. Very, very easy. That would be known as a type D to any of the members. Gold, useless. GJ, pretty useless as well. So yeah, not really looking at taking any trades at the moment on GJ, but what I will be looking for is possible higher time frame entries. So you can see here, if we break this 4-hour high and respect the previous 4-hour low, then there could be opportunities for buyers to basically get back up to this level over here and complete the retest of the high. So we obviously had that high created, had this pullback, which did flip structure at this point over here, but now we're coming back up to retest this high and possibly create new highs. Once we exceed that level, then obviously we need to look at the higher time frames, and if we get above there, you can see on the daily we have this resistance level to then possibly retest. Because at the moment you can see, just based on the daily time frame, how bullish we have been over the past couple of weeks. If you look at the previous weekly candles, very, very strong bullish. So at some point we are probably going to get that bearish exhaustion, and not just on a 4-hour time frame, but when it comes to the daily and then the weekly as well. And why I think that could be soon is because obviously the weekly candle closed on a previous level of weekly resistance. So this is our previous level of weekly resistance. You can see where last week's weekly candle closed directly on that level of weekly resistance. You can see when we've come to weekly support before, that's exactly what's happened. When we've closed on that level, we've then respected the support and continued bullish. So at the moment you could also almost classify this as a weekly range, respecting the support levels and respecting the resistance levels. It makes it very easy to trade once you have the all market structure in your favor. So if we start seeing some bearish market structure develop on the low time frame, so if we start getting it, let's say our weekly candle is bearish by Wednesday, then we'll have the weekly as bearish. The daily, okay, we're not going to get a daily market structure flip for a very long time, because for that to happen, we would have to get all the way below this level over here, as that created our original high, which was at this point over here. So that's going to be hard, but if we can get the weekly, the 4-hour, and the 30-minute market structure all bearish, and we're at this weekly resistance level, it's going to be a strong indicator that sells are going to come very easily. Very similar to the situation which we had over here when we respected this support level, and then you can see how easy we could have scaled into buys to this resistance level, and even further up. It was really, really easy buys for the past few weeks on GJ. I still have a runner which I'm holding. It is a about a 0.2. I've won at a 0.2 and one at a 0.02 because I've scaled out so much and secured so many profits on it, but it's up about 600, maybe 700 pips. I will put on a picture of it on the Telegram. But yeah, it's been very, very easy buys on GJ for quite a while. So that's why I'm thinking that, okay, we could start seeing some of that bearish market structure and then easy sells. But we'll obviously have to wait and see. Candle confirmations is obviously important as well. Problem with lower time frames at this sort of moment, guys, is because there is this 2v2 market structure and we're stuck in this range, you're not really going to find any clear confirmations on the lower time frame. So that's when you want to be looking at the higher time frames, because remember, the higher the time frame, the higher the confirmation. So if you get a daily candle close above a daily resistance level with clean daily candles to the left, there's a very high possibility, much higher possibility than if you get a 30-minute candle closing above a 30-minute resistance with 30-minute clear candles to the left, that price will continue bullish. Because a daily candle is 24 hours worth of data, whereas the 30-minute candle is only 30. So yeah, at the moment, just a waiting game. If we also come up to this resistance level on the daily on GJ, then it's definitely going to be a good indication that we will respect that weekly resistance level. We just need to obviously see, again, that bearish market structure. It is, I can't stress enough how important that seeing that bearish market structure flip is going to be. On the 4 hour, we are already bearish, but obviously it's very choppy price action. We also have some 4 hour support levels coming up. But what we can almost look to see is if we do form some 4 hour resistance, respect the high of the previous 4 hour candle, we can start moving down, and that's when we can scale into positions, very, very early positions, to get those early aggressive sells. And then obviously we're going to have still the 30-minute time frame in our favor. The only thing we're kind of waiting for, we're not going to get the daily time frame this week in our favor to flip bearish, but we can get the weekly if by Wednesday we see that strong weekly bearish momentum. Then we can definitely see that respect of the weekly resistance level. And if we do form weekly resistance, so this week closes, this weekly candle closes bearish, we can have a very similar situation to what happened here. Respect the high of the previous weekly candle. Here we respected the low of the previous weekly candle. What that indicates to us is obviously that in this situation, sellers pressure was leaving the market and there was more buyers pressure coming into the market. So here what that would mean is that there is less buyers pressure in the market and more sellers pressure coming into the market. You obviously need to take a look at the strength of the candle close. So with this candle, we had a strong support form, a strong weekly bullish candle. So we want to see a strong weekly bearish candle. What that does, it indicates that this resistance has been respected, and then we can basically start coming down. And then again, it's going to be easy sells based on all time frames, higher and lower. So if you want to take a long-term hold, you would obviously look for the daily confirmations. But if you're looking for those quick scalp entries or those intraday trades, you would look at the lower time frames. So maybe 1 hour, even the 4 hour, but to be honest, 30 minutes is probably optimal. Sorry guys, I am kind of just waffling along because there isn't much to do on GJ. But hopefully it is all making sense. Not, again guys, not interested at all in taking these sells. It would be an impulse. My stop loss would have to be placed above this candle. That is the technical level for it, but I do see why. Based on technicals, it makes sense. Of course, we have that 2v2 market structure, which again plays into the favor of both buyers and sells working out. And we have the clean candles to the left here. So it does make sense, but yeah, just not at all what I would be looking for in a trade, and very low confirmation trade in my opinion. I know some people would see this setup and take it every time, but for me, just not my sort of setup. Don't feel comfortable taking it, or I'd rather wait. Let's say it does, and this is where FOMO comes into play. If you don't have FOMO in these sorts of situations, you can wait for a strong bearish move, then wait for us to come back up and retest the previous level of support, turn that into resistance, so that could be this level over here, or come back up to a previous level of resistance and form some resistance at that point, and then form some minor support, so support on lower time frames. And once we start breaking that support, we can retest the lows which we created. And in that, waiting for that, you get an even better entry than taking this risky entry. So it just requires patience. Because what if we come down to this, sorry, wrong tool. If we come down to this level over here, and then we start coming back up, I would be expecting a reaction at this, either this level of support over here, turning into resistance, because that's your break and retest. Or what I'd be waiting for is us to come down to this level over here, come up to a previous level of resistance, and then also come back down to retest the lows. Because remember guys, 90% of the time we create a high or a low, it will be retested somewhere along the line. So it's finding that entry to retest the low. Please guys, if you are new here as well, do remember to subscribe. Can't say subscribe today. Leave a like as well, it does help a lot. There's also a free Telegram and a free Instagram, all linked in the description. Chat about trading a lot in those, and yeah, it all helps a lot, guys. Growing the community. Kind of getting that nice strong push, which is great. So if anyone is in sells, obviously the technical level for your stop loss is above the current 30-minute candle, so that would be above this level over here. Depending on where you took the sells, you should be up decently. I mean, for me, the only logical area to take the sells would have been below this wick, because then you have the clean candles to the left. Obviously it's London open, you would be expecting that volume push. Another thing I would have maybe taken into consideration is how this is a resistance level, and you can see we wicked into that twice and rejected it, and then started pushing bearish. Other than that, how this candle closed. So I often look at the pre-London candle to determine what London's going to do. How this pre-London candle closed is not what I like at all. It didn't tell us that, okay, we're closing above a resistance level or support level. It literally closed slap bang in the middle of a range. We've been doing this, and it literally closed here. So if it's closing here, there's a possibility that we go here or here and carry on respecting that range. So for me, that was a terrible pre-London candle. Wasn't interested at all in taking buys or sells at that point. Range wise, probably only about 12 pips of range to trade into anyway, which again, I like to trade probably 15 or more. If you can have 15 or more pips to trade into, that's a really good trading range. 10 or more is obviously fine, but if you're going to wait for candle closes, 10 is too small. Because by the time a candle closes in your range, it would have maybe eaten up about 2 or 3 of the pips. And then including spread, then that's another pip. And then you're left with what, 5-6 pips to trade into. It's just not enough. So for this sort of trade, it had to be an impulse entry. You couldn't wait for a candle close. I got it. Well done, Ronan. Well done, well done. I assume you're talking about you got the entry or the trade. Oh, you worked it out. Well done. Your broker. Oh, okay, you deposited. So if anyone is obviously in these sells, now would be a good time to be securing profits. You should be up at least 10 pips. Even if you got a bad entry, let's say at this level, you should be up 10 pips. What you would then be doing is moving your stop loss to break even, or this is how I would trade, so that you don't have any risk on the table sort of thing. You'd move your stop loss to break even. That way you're not risking any of your profits, and you would secure a percentage of your position. So let's say you open a 1 lot, you would close 0.8 lots. No, I didn't enter, Ronan. Not my type of entry at all. I will rather wait for a low to be created, retest of this zone, and then let's, go and retest the low. Waiting current 30-minute candle to close. Yeah, I mean, if you get a close below this 157, basically where this is, so this support level, it certainly makes sense that we can continue to possibly around here. But again, you look at that range, it's only about 11 pips. So I'm waiting for a much bigger move to happen. So more or less like this, where we can have a nice low created, and then at a later stage retest maybe this support level, even this support level, and then continue down to retest low. That's going to be a lot safer you know, it's going to be a much better price to sell at once we get that pullback. Looking on the 1 hour as well, a huge problem on GJ is we're coming into this. Now, if we just take into consideration price action in general, you don't want to be trading into this sort of stuff. This is just wicks and wicks and wicks. So there's not a lot of clean candles here based on, you know, what we're looking at. But then you kind of just have to take into consideration the higher time frames, where on the higher time frames we are going to have some clean candles to at least trade into. That's why often the higher time frames, you know, carry a lot more weighting. You can see here as well, we came up to this resistance level, we wicked into it. Now, if we're rejecting that resistance level, and then we come down and break today, the previous daily low, so Friday's daily low, it's a good chance of filling this wick and coming down to then this support level on the daily. Because again, that's playing into that very high time frame idea of respecting this weekly resistance. I honestly do think that we're going to respect this weekly resistance. And obviously to get the best entries for that, we're going to have to drop down a couple of time frames and see what we can find on the lower time frames. Of course, we may get the complete opposite and break straight through that resistance level and continue bullish. But then again, in those sort of situations, you just got to be fluid in the markets and ready then to adjust and take the buys. But just based on what weekly supports and resistances have done recently on GJ, you can see they are often respected. Please look at gold. Yeah, I'll take a look at gold now. I mean, gold is just useless at the moment. It's nothing to trade on gold. I don't like the look at gold at all. I'm looking for buys above this 1798 area. Obviously on the 1 hour we could have some issues coming up to 1800. Like I say all the time, guys, you know, 1800 on gold is an extremely key level. It's a full 100 level, so you got to be careful of that. If you look on the 1 hour though, obviously that's clean candles, but we do have this rejection wick within the 1 hour. So what I'll be waiting for is a 1 hour candle close as opposed to a 30 candle close above this level, and then I think we can maybe retest 1801. But for now, I mean, you can't really trade this. It's just useless. Unless you want to be stuck in like a chop up and down. I would not at all be interested in taking buys or sells on gold. Only place I'll be interested in is below 1791 and above 1798. Also, remember, we are on a, based on pure technicals, guys, we are in a 3v1 bearish market. Last week was a very strong bearish week on gold. We haven't actually got a top wick on the weekly on gold yet, so it is pretty unusual that you don't have a top or bottom wick on the weekly time frame, or top and a bottom, should I say. So what we could be expecting maybe later on in the week is for that top wick to form, maybe even later on today. But what I'm looking at, sorry, let me just reload this because it seems to be lagging a little bit. What I'm looking at the moment is, because of how the weekly candle rejected this weekly support with this wick, so we had this weekly support, we wicked down into that support level and rejected it. I'll be looking for the possibility of the buy continuations, even though we are in an overall bearish market based on pure technicals. Yeah, not this for me is a no trade zone, guys. On gold, not interested at all. GJ rejecting that support level at the moment. If we leave a wick in the support level, we may come down later on and then get that candle close below that level, but until then it's going to be pretty touch and go. The candle close below this level will obviously indicate that then we can continue towards 157. Again, this is another full key level, so you got to be careful of that as well. check out GU as well, guys. Remember, guys, if you do have any charts or any pairs that you want me to analyze that you guys are thinking about trading, please send them through. I'll give you my opinions. I'll break them down as well as possible, or as well as I think is possible, and then give you guys some advice on it, or how I would be trading that pair if I did trade it. I only trade 2 pairs, guys. I trade gold and GJ. I obviously use a couple of liquidity providers because sometimes you do get situations, unlike we saw on GU earlier, where you'll just get, the liquidity provider will obviously have missed out, gapping and things like that. But I'll happily analyze any pair. The way that price action works and the sort of analysis that I do, support and resistance, it works the same on every pair. So I'll definitely give you a market structure breakdown, all that sort of stuff, if anyone is interested. I'll probably be live for another 30 minutes or so, maybe 20-30 minutes. Just gonna see what we're looking at here. We have another minute for this 30-minute candle close, and it looks like it's gonna close in a pretty awkward position, to be honest. We rejected this support area straight away. Once we got down into this area, if we had got a candle close below that area, I think it would have been very easy to get the continuation towards that 157 flat level, which obviously would have been a very strong key level. We obviously are maintaining this 2v2 overall market structure, which isn't going to change for a very long time unless we get a bullish close above this level over here. So if we get a bullish candle close above 157.439, that is going to flip our market structure 3v1 buyers. So that means overall there's more buyers in the market than there are sellers. And again, if you are one of those safe traders, I would certainly suggest waiting for that, because then you have, basically, I always talk about it, pulling a rope. You have more people pulling the rope on the buyer's side than you do on the seller's side. It's going to be 3 people on the buyers, 1 person on the sellers. And who's more likely to win in that situation? Obviously the buyers. So that's just a little analogy of how market structure kind of works and how I look at market structure. Gold, useless. Remember, on GU it's a 4v0 buyers market. Looking at the high time frames, very, very nice buying opportunities as we start breaking above this 1.360 level. Also all the way up to this 1.369 level, we have the clean candles. If this is our most relevant daily resistance, I definitely think that if we break above there, we can then test the previous daily resistance above that level, which is going to be this 1.3698 level. So that's also pretty important to take into consideration. News-wise, guys, remember, if any of you do trade fundamentals or focus on fundamentals, nothing much happening today. Obviously, the Japanese bank holiday. Tomorrow we do have some high-impact USD news, but again, it's not statistic-based. It's more just someone talking. So those often do historically move the markets a little bit less. The bigger news is obviously going to come on Wednesday when we have the CPI coming through. Any vids you would recommend to understanding and identifying patterns in price action? Honestly, I'll just say watch live streams. I know obviously most people know of Wick Don't Lie. He talks about it a lot. And backtesting. Backtesting, I would just backtest as much as possible on TradingView. I'm pretty sure most of you guys know how to do it. You just click on this replay mode and you go back and you see what you see over and over and over again. Because as we know, price is repetitive. It repeats itself all the time. So the more experience you have of seeing these certain things, the more you'll pick it up and it'll become second nature. Also, another really, really good trader, someone that I think is one of the better market structure traders as well, is Todd Capital Group, Matt Todd. Really, really good trader. I would certainly suggest watching some of his videos as well. So that's Todd Capital Group on YouTube, and then Wick Don't Lie on YouTube. I think everyone knows Wick Don't Lie. Most probably Raja. Really, really good trader. Probably the best in the business. One of. Videos in particular, I don't know if I'd be able to off the top of my head, but if you join the Telegram, I'll try find some and send those in the Telegram. All that stuff is linked in the description, guys. I won't say it again. yeah, capital hungry is an extremely good fundamental trader, probably as well. When you talk about Roger Banks with price action, capital hungry is like the equivalent when it comes to fundamentals. One of the best fundamental traders out there. If you watch one of his streams or two of his streams, it changes your whole perspective on fundamentals. And what I always say about trading, guys, is some people are pure technical traders, some people are pure fundamental traders, but at the end of the day, to be purely profitable, you need to have a base understanding of both. You need to understand a little bit of fundamentals, and they maybe be exceptional at technicals, but if you are only really good at technicals and don't know how to trade fundamentally, it can screw you over heavily by not having any fundamental understanding. Even if you don't trade fundamental news, by understanding that fundamental news is on the way and how it can affect the markets, it's going to prevent you from maybe taking a trade based on technical analysis. So for me, I do trade more on technicals, but I understand fundamentals properly. So I do understand how fundamentals affect the market. What I've done, and I say this a lot, if you want to become a better fundamental trader, what you should do is go look at the dates that these sort of fundamental things happen, fundamental news events happen, and then go and look at the data. Get an Excel sheet, mark out the percentage change, and see what happened on that day, and then mark out the result. And then that way it's going to give you a better understanding of, okay, if it changes this much in percentage, how's it going to move? So obviously it sounds a bit boring and it sounds like it's going to take a lot of time, but it's only going to benefit you in the long run. So that's what I would suggest. But also go watch Capital Hungry. Jeevan is a very, very good fundamental trader. Yeah, not a lot happening basically today and tomorrow news-wise. From Wednesday onwards, it really does pick up. Unemployment claims historically, you know how they go. They move markets quite a lot. PPI does as well. Thanks. How many hours do you stream for daily? I try to do the London session, so normally about an hour and a half to 2 hours. Some days I will do London and New York, just depends. Obviously during this December and January period, it's been, or beginning of January, it's been a little bit busy. But I would certainly say from February onwards, I may be streaming both sessions, maybe both on Monday, Wednesday, Friday, but always London every day. Yeah. Can you please look at the weekly on pound NZD? Yeah, sure. No stress. I did actually analyze this, I'm pretty sure, last week. Okay, so obviously you can see that on the weekly here that we basically got a higher candle close on the weekly than previously at this weekly resistance level. What that indicates then to us is that if we have kind of formed a little bottom wick, but maybe a better retest of this sort of zone and we break the high of the previous weekly candle, there's a very good possibility of bullish continuation. You can see just by how the past weekly candles have gone that we're most likely going to be bullish on every time frame, giving us a 4v0 bullish market structure. Now in a 4v0 bullish market structure, all we should be looking for is buys, right? But we can't just base that on the weekly, because obviously if we look left on the weekly, we're going to have this wick that we're looking at. But on the lower time frames, we're going to be able to find clean candles where we can then look at our optimal entry points. So you can see the daily candle as well. We've got a nice strong daily candle close, I'd say above this level, so over here. Then Friday was basically our stall candle. So what that did was, it didn't really create a pullback, but what we did was we stalled a little bit, maybe indicating that, you know, a little bit of exhaustion. And now if this candle goes down and then breaks the high of the previous daily candle, so Friday's daily candle, again, that's another, you see this very often, that's a strong indicator that we're going to have that bullish continuation. So what you need to do is obviously you need to mark out the high of this candle, and then you need to look left and you need to see, okay, do we have clean candles to left? On the daily, we do have clean candles to left. So now you have clean candles to left on the daily. Obviously that doesn't mean on the lower time frames that you're not going to have resistance levels. So then what you need to do is you need to drop down to the 4 hour and to the 1 hour and locate those resistance levels and find trading zones. So now when you have a trading zone, you obviously mark that out. So a trading zone is above a support, above a resistance level, below support level, where there's enough trading range to trade into. You can see on the 4 hour as well, got some nice clean candles to the left. So basically what's going to be our trading zone at the end of the day is this whole area. But on the lower time frames within these clean candles, is going to be 30 minutes and 1 hour resistance. You need to mark those out. So if we get a candle close above this 4 hour resistance, that's a strong indicator that we're going to continue this bullish continuation. So I would only be looking for buys on pound NZD. I hope that does help out. It's not a full analysis, but it's basically the gist of what I'll be looking for. If you haven't already, guys, please do leave a like on the stream and subscribe if you haven't subscribed. Thank you. No problem, Nick. No problem. Do you guys do any crypto? Long-term hold. I do a little bit of long-term holds on crypto. Nothing. I don't trade it, so nothing short-term. Only long-term. But yeah, very based on some other outcore crypto professionals analysis, some friends of mine. Dalibor Savage, thank you for subscribing. You really aggravate me. You do too, Ronan. You do too. So unfortunately, guys, on the pairs that I trade, there has been next to nothing which has happened today. I mean, there were possible GJ sells, just not my sort of entry. I wasn't at all interested in the sort of this would. So how I look at this is a impulse entry, obviously a type A entry. So what you would have done is obviously taken the entry at the break of this wick, because then if you look to the left, there's clean candles. My concerns were how the pre-London candle closed in the middle of the range, where my stop loss would have to be in the middle of the range. And then obviously the trading range which we had was only about 12 pips. So for me, an impulse entry, I don't know how you guys look at, you know, the pip amount that you want, but I think obviously anything above 10 is good. But for how this candle closed, if we had a bearish candle close as our pre-London candle, I would have felt a lot more confident that, okay, it shows that there are sellers in the market, but this was the complete opposite. We had a bullish pre-London close and a bearish London open. So very, very interesting possibility there. Yeah, very good buying opportunities for anyone trading this pair. I think certainly if we get a 4 hour close above this level, it's going to indicate that there's a very good chance of that bullish continuation, especially because of how bullish we are on every single time frame. You look at the daily, you look at the 30 minutes, let's go to the 30 minutes. Yeah, super, super bullish. You can see how this candle is pushing as well at the moment. GJ, I really do want it to continue bearish. And again, guys, what I'll be looking for and how I think people should rather look at getting rid of FOMO, how you should start approaching it is, okay, we've missed this original move. It's fine. I'm not interested in taking sells now because, you know, I'll be taking sells at a terrible, terrible price. What I'm waiting for is for this low to form. So let's say we come down to this previous level of support over here, and then we create a pullback, and then we come to a previous level of support and then form resistance at that, or a previous level of resistance, so possibly up here, and form resistance, respecting that resistance level, and then we can sell it back down to the lows. So all we need to do is look for minor support levels. So support on the 15 or the 5 minutes, and then break those support levels, and then we can scale in down to the lows. So that's going to be a lot easier to do and a lot less risky than, let's say, okay, now we feel like, oh damn, we missed the original move. How are we going to now make some money? And then that's when people start diving into moves over here and at the lows. You know, some people, honestly, some people would have been selling at this point down here because they saw this move so much and they feel like, wow, I missed the move, you know, that's my opportunity gone. So it's just having that patience to wait for what you want to set up. So I know exactly what I want to see, visualize it before it happens, and then that's when I look to take the entries. Gold again, guys. Gold is not worth trading at all while we are in this shit over here. Not at all. Rather wait for it to break above this level or break below this level. Like what we have right now is just terrible range, you know. Wicks everywhere, supports and resistances everywhere. It's just, yeah, not ideal. Even on the higher time frames, it's quite hard to see what gold's going to do. But what I would also be looking at, and the reason why I think these buys above the 1798 level are so likely, is because then we're breaking the previous daily high. Respecting the previous daily low and not respecting the previous daily high, indicating that the buyer's pressure is improving. What lot size? You need to specify what you mean with that question. Great breakdown, thanks. How often, if any, do you take impulse entries, and have you found them to be less profitable in your opinion, or do you think it's just risky and borderline FOMO? So I've my take on impulse entries is that they come with experience. So you can often pick out a really easy impulse entry with experience. After trading for a certain amount of time, you do notice when the impulse entries happen more. And to be honest, if we're going to have anything similar to last year, January, February, March, there was a lot of impulse entries at that time. So I think they are also time of the year dependent. So beginning of the year, last year, if it's going to be anything like last year, we'll have a lot more impulse entries. But yes, I would say that if you put those with waiting for a candle close, on average, you're going to be less profitable for sure. Just because your stop losses are based at a lot higher points and it's a lot less confirmation. You know, you want to wait for those confirmations rather to make your probability of the trade working out a lot more. And I do think that there's a lot of FOMO involved in a impulse entry. I mean, in the long run, you know, I could have taken this impulse entry. It would have ended up being a winning trade. But what I thought to myself was, okay, rather wait for, if I'm not comfortable with the move, rather wait for a move to be created. And then eventually, you know, we'll get that move back down if we are going to continue that bearish momentum. So I'd say it definitely has an aspect of FOMO to it. A lot of people will see this start moving down. And it's pretty sad because some people will be scaling into the move at this point over here because obviously they see other people making money. If they are trading, let's say, with other people who possibly took the trade, now they'll be feeling bad and they'll be wanting to take the trade. So certainly an aspect of FOMO to it. But I mean, you do also get some very good impulse entry trades where you can only get with the impulse, you know. I think it's very, very subjective as well. What lot size? So obviously, depending on your account, you're gonna for me, what I do, well, I've been using the same lot size for ages now. But what I would say is, for you, what you need to do is you need to use your magic keys and select on the expert list percentage of account and make that 2%. That way it's going to be you're going to be basically using a fluctuating lot size based on your stop loss. So it's going to only risk 2% of your account based on your stop loss. So the maximum your risk per trade is 2%, which I think is, you know, the safest way to go about it. You don't want to be going in there with a one lot in your accounts, you know, a few thousand dollars or a few £1,000. You want to be using a specific lot size based on percentage risk. So if your maximum risk you want to risk per trade is 2%, you need to work out what that's going to be based on your stop loss. So use the magic keys. Magic keys is made for that. It will work it all out for you. if there is any advice I can give to you guys going into this new year, obviously I talked about it going into the end of last year with everyone who was in the stream. It's if you can implement something into your trading, try 1 to 2 trades a day and risk a maximum of 2% of your account per trade. So that includes managing risk. And then take when you're done the stream, come help me, I will help you. And trade 1 session a day. And someone who preaches this over and over and over again is Roger, you know, Wicks don't lie. And you know, there's a reason he is as profitable and as good as he is at trading. And basically anyone who implements this into their trading, give it 1 to 2 months and you will see a huge change in your profitability, everything trading related. You'll see a massive change. And I think the first one you need to start with is honestly that 1 to 2 trades a day, and then obviously the 2% risk as well. We have about 10 minutes left, guys, and then I'll be calling it a day. Could also add to look for a range of minimum 20 pips. Okay, very good point, Sharif, to be honest. But what I would be saying is, instead of trying to get a monetary amount, guys, instead of looking for a monetary amount in your trades, rather aim for an amount of pips. So if that's 10, 20, you know, instead of saying, okay, I want to make $1,000 this trade, rather tell yourself, okay, I'd like to achieve 10 pips today, 20 pips today, rather than you know, going for, oh, I want to make $1,000 today, I want to make $2,000 today. Because if you start chasing money like that, it's very unlikely to work out. But yeah, I do agree with the range thing. If you guys are looking to take trades, please trade in safe trading ranges, you know, above 15 or so pips. 20 pips is sometimes quite hard to find. But if you can find, you know, over 10, 10's risky, 15's good, 20's are ideal, I would say. Sorry, just gonna reload this, guys. It was lagging a little bit. Great answer, thank you adding to that. For me, if I took impulse entry, it didn't work out. Okay, the wick. When it comes to, I just hate that feeling of thinking, damn, yeah. I mean, yeah, that's the problem. Like, if this was a situation where, let's say, the support level here, which we rejected, was high up, this would then become that wick, and it would have been obviously one of those situations. But I think because there was probably a little bit more trading range in this, it did work out. But I mean, impulse entries fake people out all the time, you know. It's just part of it. So what I would say, if you can, until you feel, I would say maybe 80 to 90% confident with impulse entries, is just never ever take one. Don't allow yourself to even take one thinking, okay, there's a good probability of this working out. Just cut them completely out of your trading. See if that makes a difference. And then once you start understanding and seeing impulse entries more often, then start, okay, taking lower risk impulse entries. Whenever I take an impulse entry, I lower my lot size quite a lot. So if my standard lot is, let's say, a 20 lot, for impulse entries I always lower that to about a 15 or a 10 lot. I'll never allow myself to take a high risk trade with my normal lot size. It's just risking too much, and I would definitely don't feel comfortable with it. Even though I manage risk at a pretty high level, I just don't feel nearly as comfortable. What do I do for a nice trade now? Just some patience is needed there, Ronan. But yeah, a trade would obviously be ideal. I think honestly some buys on gold at a later stage could be very nice. I'm obviously wary about this 1800 flat level. We know how much we react at this zone, so let's see what happens. We can maybe get buys from 1798 to 1800, maybe a little bit further. On the 30-minute, we obviously have this resistance level here, but on the 1 hour, you know, it is clean candles. So if we got a nice 1 hour close above that level, that would be great. Rainan, you do make me smile. You are a clown. Got about 5 minutes left, guys. So yeah, any more questions, any more charts, any more analysis or anything like that you guys want me to do, I will I'll happily do that. You have a good moderator there. Yeah, this guy. Raiden, do you deserve mod? I don't even know if you deserve mod anymore. Take a look at GU. Sure. I did do a full breakdown on GU earlier, but let me do one more because I know how popular it is as a pair. Which one did I do it on? I think it was FXCM. No. Oh, this is pound yen, no wonder. Yeah. Okay. Gonna do a full breakdown on GU, guys. I did do one earlier, but I think that this is a really good pair for what, like how market structure works. So if we start on the weekly, you can see we obviously had this weekly resistance that we got that candle close above, then we got the retest of that resistance level, which on the lower time frames would have formed some support and then look something like that. So we are obviously weekly in structure, market structure, bullish on market structure on the weekly time frame. What we'll be looking for now is that bullish continuation. We've got the clean weekly candles to the left to trade into, which is obviously looking nice. That looks like a really nice setup. Also bullish in market structure on the daily. This was our low over here. Remember, now we look for a 2 or more candle pullback. That would have been this level over here. And then we look for a candle close above that level. So we were bearish in market structure. Now we are bullish because we obviously have the candle closes above that level. So bullish in market structure. You can see we have a daily resistance over here. So what we obviously want to see is a break above that daily resistance, because the daily resistance is quite strong. If we start rejecting that daily resistance, it's an indicator that we're respecting it, and then we're going to carry on moving down. So what you'd obviously want to see is a break of that daily resistance level. We've also obviously formed some daily support over here, but that's quite far away. And also you have another support level right below that. So bullish in market structure on the weekly, bullish market structure on the daily, 2v0 right now. We go to the 4 hour, also bullish in market structure. This is our high basically, because we haven't really exceeded the top of that, so we can't class that as our high. So this is our current high, point which created the high, so we'll only be bearish below this level over here. So market structure 3v0, because we have 4 hour is bullish as well. Now we look left because we want to find those clean candles. You can see here, this is a 4 hour resistance level, but if we break above that level, which is also the daily resistance level, we have the clean candles to the left. So obviously we can mark the top of that out and see, okay, if we get a 4 hour candle close above this level, there's a good chance we'll retest the previous resistance level above our marked out area. So that's going to be at that 1.369 level. Now obviously on the 4 hour, if it's clean candles, we need to drop down to then the 30 minute, because that doesn't mean it's going to be clean candles on the 30 minute. So we would be expecting to find maybe a couple of resistance levels within our trading zone, because at the moment this is our trading zone and we want to refine that to find trading zones within our bigger trading zone. So you can see here we are ranging a little bit similar to GJ. We obviously have these support levels. I wouldn't be really looking for sells at the moment on GU. Where I would be looking for possible sells is if this is our high, this is the point which created the high, so we will flip bearish below this level, giving us a 3v1 bearish market structure. But then if we break below that level, we have a support level right here. There's not enough trading range to take a sell there. But if we look at this, if we break below this support level, clean candles to the left, and this would be our support level, which we would then expect to test. So sells would then make sense below that 1.356 level. If we then look to the left above our, remember this top resistance zone is marked all the way from the daily time frame. If we look left, got to keep going. Okay, so now we remember on the 4 hour, these were all clean candles, but obviously because we're dropping down time frames, you can see that there are going to be some resistances within those levels. So this would be where I would expect price to start rejecting, is at this resistance level. But for now, you can see clean candles to the left if we get above this level. So easy buys above this level, and then obviously you would look for more trading zones above these resistance areas. So I would say I would only be looking for buys above 1.36073, and I would only be looking for sells below 1.35604. And again, that will still be counter trend. So what you could end up happening is something like this, where you come down to this level and then continue that overall move up. because you'll still have a 3v1 bullish market structure. When you mention 3v1, do you mean timeframes? Yeah, so 3v1 means, this is how I basically teach market structure, is you look at one time frame and you establish a market bias within that time frame. So what that will do is that will basically, if you take the 4 time frames and you have one bias for each time frame, you can then establish, okay, are more time frames bearish or more time frames bullish? And by then understanding, okay, are we in if we have a 3v1 bullish, overall the market structure is then bullish. So there's more buyers in the market, keeping us on the right side of the market if we're looking for buys. I don't want to take sells in a buyer's market. I want to take sells in a seller's market. So then I'll be looking for a 3v1 or a 4v0 bearish market. And what you do is then you take the 4 time frames, you establish a market structure on each time frame, and then put them all together. Can you simply understand how to read market structure? I can't give away too much, but because obviously that is a big part of the course that I do and what I do with the members. So there are people paying to learn that, but I can give you a quick example of what I would do. So basically, I'll do it based on a line chart. So if we have a high created, this is an uptrending market, right? So I would assume that we can all see that this is an uptrending market, and we would say that this is a bullish market. But how would we know then when to take sells in this market, or when does it become a bearish market, right? So how I look at it is, if this is our high which is created, this is then the point which created the high. We will only be bearish in market structure once we get below this area over here, the point which created the high. And that doesn't mean a wick down. It means we get a full candle close below that area. So what a lot of people do is they start seeing, let's say us, if I can select this tool, they'll start seeing something like this, and they'll say, okay, we're bearish in market structure because we have, lower highs, lower lows, lower highs, lower lows. But this is all micro trend. So what normally happens is people start taking sells on as price starts micro trending down, and then we get to that point of market structure flip and we respect it, and then we continue with the overall trend and continue moving bullish. So people get basically faked into the sells because they think we're bearish in market structure because they see this, but we are not bearish in market structure because we haven't exceeded the point which created the high, which is this. So the safer area to take sells when okay, the sellers have now taken over, is once we get below this area. And then once we're below this area, we know, okay, we've exceeded the point which created the high. And that comes when you look at a candle graph as a two or more candle pullback. So I can give you a quick example of that. On the, I think it was a daily time frame, was a really nice one. Oh no, it was yeah, it was. So if this is our low down here, now we look for 2 bullish candles as our pullback. So you can, 2 or more. So you can see here, this is our pullback, 2 or more. We need to exceed this point over here to then be bullish in market structure. And that only comes with the candle close. So now that we have this as our high, now we are bullish in market structure. Now we look for 2 bearish candles, and that's down here. So obviously this is a very brief explanation, and to most people this will sound, super confusing, and it won't make any sense whatsoever. But again, that's why there's a huge part of the course which is dedicated to market structure, because for me market structure is one of, if not the most important aspects of trading. I talk about it all the time on the streams, guys, that if you're on the right side of the market, the best analogy is honestly the tug of war. If you have tug of war with 4 players and they represent the different time frames, and 3 of those are bullish, so you basically have 3 people pulling on the one side of the rope and the one is bearish, who is more likely to win? And that's how market structure works. So if you have 3 market structures which are bearish 3 time frames which are bearish in market structure and 1 which is bullish, that means that there's more sellers in the market. So why would I want to buy? So this basically prevents me from ever being on the wrong side of the market. So I hope that does make sense. Stanley, I hope that does help a little bit and make some sense. But basically what you want to do, briefly explained, is look for the high or the low, identify the high or the low, and then identify where that was created from, that high or the low. So quick example, here's the high. Where was that created from? Over here. 2 or more candle pullback. When we exceed that, we'll be bearish. So we're bullish, micro trend, micro trend, micro trend. Now we close below it, now we're bearish. And that's only on one time frame. And always remember, guys, the higher time frames carry a lot more, you know, weighting than the lower time frames. Higher time frames will always be stronger in confirmations than lower time frames. Still rejecting that support area on GJ, so at the moment, not much to do on GJ. I will probably be, I'll definitely be back for if any members are available for New York. Ronan, I know you said you are available for New York, so I will do a members call for New York. If there's any other members available, I'll chat to you guys all on the members forum as well. But yeah, I think that maybe it for me, guys. Is again, if there was something happening, I would definitely hang around. I do have a few things to do, but let me just go through what I'll be looking for today for the rest of the day. Buys above 17.98 on gold. I think there's some really good buy opportunities. That will also be the break of the previous daily high, so take that into consideration. It will be counter trend though, so obviously you need to take that into consideration as well. But I think with us rejecting that weekly support level, that there's a good chance. You can also see on the 4 hour, we are coming up. So hopefully we get a candle close above that 4 hour resistance level, and then we can continue. So looking for buys there, sells below 17.91, but that range isn't great. And then on GJ, obviously looking for maybe some more sells. It's going to be tough to find sells, to be honest. Otherwise, if we get that structural flip at 157.438, I'll be looking for those buy continuations to retest this high over here. Other than that, not much. If you guys haven't joined the free Telegram, please do. I'll post a couple of charts in there for New York, for gold and GJ if things have changed. If not, just refer back to this. Thanks so much for your help today. Thank you, Blip, for being in the chat. I do appreciate it. And yeah, if you guys haven't joined the free Telegram, follow the free Instagram and like and subscribe to the stream, please. It does help a lot. But yeah, I hope you guys have a great rest of your day. I'll be live again. I stream every London session, so I'll be live tomorrow for same time, same place. And yeah, Sharif, thank you as well. Thanks for being here, and I'll chat to you guys all on Telegram. And yeah, trade safely for the rest of the day, please, guys. Please don't take any stupid trades. No impulses if you guys can prevent that. And if you have taken any trades, if anyone did take this impulse trade, take your profits for the day and go home a happy man. But yeah, I do appreciate it, guys. Thank you very much for the stream. Cheers.